This is Bloomberg Crypto. I'm Matt Miller in New York with Kaylee Lyons in Washington. Let's get to some crypto stories that caught our attention this week. The co-founders of failed crypto hedge fund Three Arrows Capital have found themselves in trouble in Dubai. Authorities are reprimanding them for operating and promoting their new digital asset exchange, OPNX, without the required local license. Dubai has been taking a stricter approach toward crypto, even as it tries to position itself as a hub for the industry.
And MicroStrategy has posted its first profit in 9 quarters. That's after registering a tax benefit related to its hoard of Bitcoin. Shares of the enterprise software maker, which is the largest public holder of Bitcoin, are up almost 120%, more than that now, actually, so far this year.
Coinbase is launching an international derivatives exchange for institutional crypto traders outside of the United States of America. The new platform will list Bitcoin and Ether perpetual futures starting this week. In a blog post, Coinbase wrote, the company is committed to the U.S., but countries around the world are increasingly moving forward with responsible crypto-forward regulatory frameworks to strategically position themselves as crypto hubs. We would like to see the U.S. take a similar approach instead of regulation by enforcement. Like Bermuda, for example. Joining us now for more is Bloomberg's Katie Greifeld. So it's an exodus. Is it?
I wouldn't say it's an exodus necessarily, but it is a diversification, you could say, by Coinbase. Of course, we know that they've gotten in a few tangles with the SEC. The Wells notice that landed in March is just the latest. So again, moving to Bermuda, offering this in Bermuda, the plan is it's going to list Bitcoin and Ether perpetual futures. And I think this is very important. They took care to say that this initial international exchange is going to be in Bermuda and only for non-U.S. institutional clients, so not for U.S. players.
Probably targeting some of that language at the SEC, trying to be very careful about what it messages here. And I mean, we have to consider that this is a regulatory question that is an overhang on the stock. You had Citi downgrading Coinbase to neutral yesterday because of regulatory uncertainty. So this could, in theory, matter financially for this company. We're going to get a better read on the financials, though, on Thursday, Katie. What should we expect from these earnings?
Well, of course, any commentary, any sort of executive commentary around those regulatory concerns is going to be front and center. But to your point on the stock, I was just looking at this. It's really interesting. Of course, Coinbase has had a fantastic start to 2023. The stock is up 44%, not too bad when you think about what this S&P 500 is doing. But then you look at Bitcoin itself. Bitcoin is up to the tune of 71% in 2023. So this absolutely has been a weight on the stock. We know that volume in terms of what Bitcoin is actually doing, how it's being traded, has gone down, even though we have seen this big rebound in the coins themselves. So any sort of insight on what the regulatory temperature is and how perhaps they're trying to make up for that lost volume is going to be tough.
You sit over on the other side of the newsroom, working the phones all day long, talking to people in this market. What do you think about the argument that it's the turmoil in banking and the rise in rates to fight inflation that has really held the price of Bitcoin up?
I will say when I talk to people, the sense that I guess is it's a convenient coincidence that you do have all this banking turmoil. But if you didn't, and you still had the Fed potentially preparing for its last rate hike of the cycle, would Bitcoin still be up? Obviously, it was rallying big time before we saw what happened in March. It's continuing to rally big time. So whether this is macro or really a move away from the banks, most people I talk to say it mostly has to do with the macro.
All right, Katie Greifeld, thanks very much, cross-asset reporter from Bloomberg News. Coming up next week, Zed Yin, co-founder of NFT marketplace Magic Eden, joins us. We're going to be talking about NFTs again. Can you believe it?
Matt, I feel like we haven't talked about NFTs on this show in a long time, so I guess we're about due for one of those conversations.
Absolutely. We'll talk about non-fungible tokens, but I'm sure we'll talk more as well about what the Fed rate hike means. Is it the last one? If rates come down, can Bitcoin still appreciate in price? And is the banking turmoil behind us? All of that related to this new industry. This is Bloomberg.
I'm John Oliver. Welcome to Bloomberg Markets.
And I'm Alex Steele. Let's get check in here on the markets. We are to the downside here with the S&P around the lows of the session, down 1.3%. The big part of that is going to be regional banks. Just take a look at the KBW. John will get to that in a moment, but off a whopping 5%. Every stock in that index is lower. Now, where do you go for the safety? You go to the bond market. Yields down by about 16 basis points. It's also reversing some of the losses that we saw in the bond market from yesterday. And crude still down a whopping 5%. For me, John, is that a signal, or does that tell us something about where we actually are, or a reaction to what's happening in the rest of the market, John?
Obviously, a lot of questions, and to your point, questions specifically about the regional banks breaking into that ETF that Alex was just highlighting. You're seeing names like PacWest and Western Alliance in a day where we've seen a series of volatility halts, still down in the neighborhood of 23% and 16% respectively, not at their weakest levels, but obviously sizable drops. The list goes on, the names like Comerica and Zions, and Alex, just some of the analyst commentary, D.A. Davidson suggesting, well, maybe there was a desire to hear more from the FDIC, specifically on deposit insurance plans going forward. Whatever the reason, ahead of the Fed decision tomorrow, we are seeing lots of jitters within the banking sector right now.
Yep, and speaking of those regional banks, John, just yesterday at the Milken Conference, we heard TCW CEO Katie Koch discuss the importance of the sector.
If you look at companies with 100 employees or less, 70% of their commercial and industrial financing is dependent on banks with less than $250 billion in deposits. And 30% is dependent on banks with less than $10 billion in deposits. So as we get this deposit flight, we're going to have a credit crunch, and that's going to put downward pressure on jobs. We would be very underweight the regional banks.
Let's head now live to Milken, where Bloomberg Sonali Basak is alongside David Breach, President and COO of Vista Equity Partners. Sonali?
Thank you so much, Alex.